historically going into a recession like this is bullish for gold. And, the gold doesn't pay interest. So the Fed cutting rates is bullish for gold. Surprise jumbo rate cuts are bullish for gold. And we're going into that at an environment of nominal all-time high prices. So that's extremely bullish for gold. I mean, the gold is making headlines now. It closes not just, a little spike over 2,500. It makes weekly closes over 2,500. We had a monthly close over 2,500 and just 20% higher from here, which would not be a big move in the gold market, takes us close to 3,000. You don't have to imagine, just think about the headlines on the way from 2,500 to 3,000 with gold already making headlines. It's the sort of thing that attracts a lot of attention.
The price of gold has steadily risen since March, largely driven by the current economic climate. High inflation, elevated interest rates, and a looming presidential election have prompted many investors to turn to gold as a safe haven to protect their wealth. This rush to safety has pushed gold to record highs multiple times, surpassing $2,500 per ounce in August. Although inflation has cooled recently, and the Fed is expected to cut rates soon due to this decline, most experts believe that the upward momentum in gold prices will continue through 2024. Lobo Tiggre, analyst and editor of the independent Speculator, highlights that gold doesn't pay interest. So when the Fed cuts rates, it tends to be bullish for gold. He points out that surprise jumbo rate cuts are especially beneficial for the metal. With gold currently at nominal all-time highs, Tiggre emphasizes that the current environment is extremely favorable for further gains. He notes, "We're seeing headlines about gold making weekly and monthly closes above $2,500. A 20% rise from here would take gold close to $3,000. Headlines like that will naturally attract a lot of attention, suggesting that the price momentum could lead to even more interest from investors. Furthermore, the U.S. is flashing major warning signs of a potential recession. These concerns have intensified after the July jobs report triggered the SOM rule, which is often considered an early indicator of an impending recession. This adds another factor favoring gold bulls as economic uncertainty tends to drive more investment into gold. Lobo Tiggre explains that when labor numbers come out weaker than expected, the market tends to view this as bullish for rate cuts, which historically has been favorable for risk assets. However, he emphasizes, "What I can say with more confidence is that going into a recession is historically bullish for gold." In times of economic downturn, investors often seek the safety of gold, making it a strong performer as recession risks increase. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
Cash is king in an extreme moment, but this is a key point. I think that I'll be shown right about the hard landing. I think I'll be shown right about that this year. But I think people conflate recession with market crash. Those are not the same thing. And sometimes if things seem fine, suddenly there's a shock and we go into recession that could precipitate a market crash, but it doesn't have to. And with the Fed having trained investors for years now that bad news is good news. And it's not just training, like the Powell himself has said the time has come for policy to adapt. They're shifting towards focusing on the labor market. Funny thing, greatest economy ever, but the Fed is now going to focus on the labor market, not inflation. I think they're telling us something, right? Pretty clearly. So the market is not wrong to say, oh, gee, well, if the labor numbers come out weaker than expected, that's bullish for rate cuts. Which, if you're in those risk assets, traditionally you see that. Not traditionally is not the right word, but recent historically, that's bullish for those assets. So you could see signs of recession denier capitulation actually propelling the S&P 500 to new all-time highs. In our crazy through-the-looking glass economy, central bank distorted economy, that's actually, I don't want to say sensible or reasonable, but that's the reaction function in such a distorted market. So we could see bad news be very good news for risk assets, or not, if it's scary enough where people go, oh, whoa, wait a minute, this isn't what I signed up for. It could go the other way. So that makes me very reluctant to just say, oh yeah, buy Nvidia, buy the S&P 500. This is gonna the money helicopters will take us to new all-time highs. That is a possibility. I don't know what the odds are. What I can say though is that historically going into a recession like this is bullish for gold, and the gold doesn't pay interest, so the Fed cutting rates is bullish for gold. Surprise jumbo rate cuts are bullish for gold. And we're going into that at an environment of nominal all-time high prices. So that's extremely bullish for gold. I mean, the gold is making headlines now. It closes not just, a little spike over 2,500. It makes weekly closes over 2,500. We had a monthly close over 2,500, and just 20% higher from here, which would not be a big move in the gold market, takes us close to 3,000. You don't have to imagine. Just think about the headlines on the way from 2,500 to 3,000 with gold already making headlines. It's the sort of thing that attracts a lot of attention. And I think I've said this on your show before. I think we're getting to the point where it's demonstrated. We're seeing this in action. The gold stocks have started perking up. There's been this huge underperformance, alligator jaws opening, right, between the gold, the metal itself, and the stocks. And we are seeing the stocks starting to perk up.
Mm-hmm.
The big producers in Q1, they all beat. Granted, the expectations were low, but they all beat. And Q2 is already starting to look good, the results here. So the actual business of gold mining, which so underperformed in the last cycle, is looking much better this time going around. You combine that with the headlines we'll get out of new nominal. It'd take a fair amount to get us to a real all-time high. I think that would be well over 3,000.
After gold, silver, often called the restless metal, comes into focus. This white metal has earned a reputation for confounding both bulls and bears, with its erratic and unpredictable price movements. Analyzing silver's behavior requires a nuanced and specialized approach. On the one hand, it's essential to blend long-term historical perspectives, understanding its role as both a monetary and industrial metal, with short-term trends on the silver chart. This duality makes silver's price movements more complex and challenging to forecast than those of gold, adding an extra layer of intrigue for investors. Silver price ended Tuesday's session with losses of more than 1.50% after economic data in the U.S. hints that manufacturing activity continues to decelerate. Tiggre acknowledges that silver has acted more like an industrial metal in recent years, noting, "Last year, silver was correlating more with copper than with gold." Despite seeing more upside potential in silver in the long run, Tiggre is more comfortable betting on gold at the moment. He concludes, "I still think silver will have its moment, but right now I'm more inclined to speculate on gold while being cautious about silver." Let's now turn our attention to the video again.
The second shooting war erupted around the world, the second big one, right, in the Middle East erupted last fall. We have seen silver acting more like a monetary metal, and that's been very encouraging for me as a silver bull. I am bullish on silver. My Darth Silver thesis is not a bear case for silver. It's just that when gold goes back into circulation as money, currency, I'm not sure that silver does as well. With, blockchain solves that, right? We don't need silver to make change for gold anymore. So I'm not sure why, not when a new gold standard gets put into place, why it would have to be bimetallic. So that gets me a lot of hate from silver bugs. But that doesn't mean I don't stack silver. I've got more silver stacked than gold by volume, at least. So I'm bullish on silver. I'm happy to see that it's been acting more like a monetary metal should. And for anybody who's missed it, the point there is like, silver and gold, they go together. They correlate highly. Of course they do. But last year, silver was correlating more with copper than with gold. Its industrial side is stronger than ever. That doesn't mean it's not a monetary metal, but it does mean that you can't ignore this market dynamic. The industrial side is stronger than ever. That matters. And people get mad at me for saying this, but this is, I think on the other side of the recession, this is even more bullish for silver. It's the win-win metal, because as a monetary metal, it responds to the turmoil. As an industrial metal, when the money helicopters fly, and it responds to that wildly inflationary scenario that we see following the crisis. But before going into the recession, does it act more industrial? Does it act more monetary? I don't know. Nobody knows that. This is the first time we've been in this situation, and we'll just have to see. I mean, look at what happened in 2020. Gold and silver got whacked. Gold comes screaming back, and silver still has yet to hit even a nominal all-time high. But it is the most recent data that we have. So I just think it's very dangerous to ignore that. And again, I'm not a bear on silver. I'm just saying that going into this recession, if I'm right about recession denier capitulation this year, that could cause silver to underperform. And, big surprise, silver underperforms gold at first and then catches up at the end. I still think we'll see that pattern, but it makes me nervous about speculating more on silver now. If I see a great pick, I'm still willing to do that. There's so few, but I'm the answer to the question is I'm more comfortable betting on gold and silver at this particular moment, though I see more upside in silver when it does one of those whipsaws at the end, uh, you know, as this plays out.
The gold price hit several record highs this year and has maintained its momentum. However, this is expected to result in a slowdown in investment and consumption demand in 2024. Currently, gold prices are trending downward due to a lack of safe haven bids and the strength of the US dollar. Key factors that will influence gold's future performance include upcoming US jobs data and interest rate decisions. Additionally, September has historically been a challenging month for gold, which could further impact its price trajectory in the near term. In times of economic uncertainty, do you prefer investing in gold, silver, or other assets? What's your rationale behind that choice? We value your thoughts, so feel free to share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.